Attention all small business owners, including those of you with side hustles and online stores like Etsy, Amazon, and Shopify. Today we're talking about a significant IRS update that's flying under the radar, despite the fact that it has massive, and I mean massive, implications for over 32 million small business owners in the United States, including those of you who sell on platforms like Etsy, Shopify, and Amazon. Now, some platforms have begun to educate their sellers about this new act. For example, Amazon has taken the time to create a resource hub about this new IRS law. However, Etsy has not, which means that many Etsy sellers are actually in the dark about this. However, they are not the only ones. This topic just isn't getting the attention that it deserves. And it's crucial that we spread the word. So make sure you share this video with anyone you know who's running an e-commerce business or owns a small business. And for those of you who have heard about this act, but think that they're off the hook because of a recent March ruling, you are mistaken, because this still applies to the vast majority of small businesses in America. So be sure to stick around for that information as well, which I will cover later in this video. Also, make sure you hit that subscribe button because I will be keeping you updated on this ruling, if there are any new developments that could impact you. Today, I'll cover the crucial steps that you need to take immediately to stay compliant, especially given the fast approaching deadline. Missing this deadline could result in hefty fines or even more severe consequences, like jail time. So make sure you stay tuned until the end so you don't miss any important details. So let's jump right into the facts so we don't waste anyone's time. So starting January 1st, 2024, the Corporate Transparency Act requires detailed reporting to the Financial Crimes Enforcement Network, which is part of the U.S. Treasury, aimed at reducing financial crimes like money laundering. This law affects almost every small business owner in the U.S., including those involved with e-commerce. So this law now requires businesses in the United States to report individuals who own or control the business, and must report this through a new form called a Beneficial Ownership Report, or BOIR. So who needs to take action? Who needs to actually fill out this form and submit it? So domestic reporting companies, or LLCs, S-Corps, or similar structures must file a report if they are registered through any Secretary of State. So if you have a sole proprietorship, then you do not have to submit this form, unless it was created through your Secretary of State. The second type of company that needs to fill out this report are foreign reporting companies. So if you operate a foreign business, but are registered to do business in the US, you are also required to comply. There are 23 exemptions for entities not required to submit this form. Generally, these exemptions apply to companies with 20 or more full-time employees and over $5 million in gross receipts for the previous year. Other exemptions include not-for-profits, banks, tax-exempt entities, and I'll make sure to throw a link in the description box that has the full list of exemptions. So if you're not exempt, and most businesses are not exempt, you need to complete this form. I'll keep you updated on any changes to this ruling, so make sure you subscribe so you don't miss any important information. Just imagine if nothing changes by January 2025 and you forget to submit this form, you could be facing really hefty fines and penalties, like thousands of dollars in unexpected fines or worse. So who qualifies as a beneficial owner? And who should be listed on this form? A beneficial owner is defined as someone who either directly or indirectly exercises significant control over a company, like a CEO or someone who owns or controls at least 25% of a business. For instance, if you and another partner jointly own your business, both of you should be listed as beneficial owners on the report. Similarly, if you and 3 others own 25% of a business, all 4 of you must be declared as beneficial owners. Essentially, anyone with a 25% or greater ownership stake must be reported. If the ownership is less than that, then there's no need to include it on the form. If your business was established before January 1st, 2024, you have until January 1st, 2025 to submit this form. This deadline applies to all corporations, LLCs, and businesses that are not exempt as of January 1st, 2024, or who are part of the recent Alabama Supreme Court ruling, which I'll discuss further later. So essentially, you're given a year to fill out this form. Now, if you are a new business that was created after January 1st, 2024, or if you're getting ready to create a business this year, then the rules are different for you. You only have 90 days from receiving public notice that its creation or registration is effective to submit this form before you are subject to fines and penalties. According to the government website for this form submission, an individual who willfully fails to meet the Beneficial Ownership Information, or BOI, reporting requirements could face civil penalties of up to $500 per day for each day the violation continues. For example, failing to file this report for 60 days could result in a $30,000 fine. That's why it's so crucial to understand the seriousness of these penalties, because they are substantial. Additionally, such violations can lead to criminal penalties, including up to 2 years in jail or prison and fines up to $10,000. And with the amount we already pay in taxes, it's important to avoid these extra financial burdens. Now, on March 1st, 2024, a federal district court in Alabama ruled that the Corporate Transparency Act is unconstitutional. So a lot of people mistakenly think that they're off the hook, but that is not true. Companies and persons that were not a plaintiff to the case or members of the NSBA as of March 1st, 2024, at this time assume that FinCEN continues to view them as subject to the CTA or the Corporate Transparency Act. Although individual circumstances of companies may vary, in general, companies should be prepared to meet any timelines for filings required by the CTA. Next, I'm going to demonstrate how to fill out this form, and I'm going to throw a link in the description where you can download and fill out this PDF yourself. So once you're at www.fincen.gov/BOI, and once again, this link will be in the description box below. There's going to be tons of information here about how to file, who qualifies as an exemption, etc. You're going to select File a Report using the BOI filing system. Then scroll down to where it says File BOIR, and there's a PDF version and a web version. With the PDF version, you do need Adobe 8 Reader or higher. So if you don't have that on your computer, you're going to want to go with the online version, which is what I'm going to do. Then select Prepare and Submit BOIR. This warning is going to pop up, so read through that and then select I agree. Now, if this is your first time filling out this report, which for most of you it will be, you're going to select A, Initial Report. Under Type of Filing, it will autofill the date it was prepared. Then you can go through and read all this information, and then you'll go through filling out your reporting company, your company applicants, beneficial owners that you want to add, and then you can finally submit that form. Then select Next. Now you can request to receive your FinCEN ID number. Basically, if you have a FinCEN ID number, you can use this number instead of putting in your personal information. Select whether or not this was a foreign pooled investment vehicle, your reporting company legal name, or any alternate names that you use. You'll fill out your tax ID number, select your country or jurisdiction. You're going to select your ID type. If you have an LLC, then you will likely use your EIN or your employer identification number. Unless you are a foreign business, which in that case you would select there. The country that your business was formed in, most of us will be putting United States of America. The address of your business. Select Next. Check here if this is an existing reporting company. If this is your first time, you'll likely not need to check that. You can add your FinCEN ID number, your legal name and date of birth, fill out your personal information here. Then you're going to add the information of your beneficial owners of your company here. And then last, you'll submit the form. Make sure you double check all information for accuracy before you submit the form. After you submit the form, ensure you receive a confirmation and retain that for your records. This new requirement may seem daunting, especially for those of you who feel unsupported by their prospective platforms. That's why it's more important than ever to stay informed and proactive. For Etsy sellers and many other small businesses, taking action now is crucial to avoid severe penalties. Now, I'm not a legal or financial advisor. I'm just a small business owner who wants to spread the word to other unaware entrepreneurs, so I urge you to share this video with other online sellers and small business owners. By spreading the word, we can ensure that no one is caught off guard by these new requirements. Don't forget to hit subscribe and hit the like button if you found this information helpful. Your engagement helps push this vital information to other people who really need it. Let me know what you think about these new requirements below or any questions you may have. Up next is a video about important tax updates for Etsy sellers. See you all there.